Good morning, my name is Prince of Kwiecie, I'm Chief Economist of the XTB, and it's my pleasure to have you on our XTB weekly trading webinar. So today I think we couldn't have any other story rather than this new COVID variant that hit the markets on Friday, causing a real Black Friday on equities, on indices, on commodities, especially energy commodities like oil or gasoline. So the question, obviously, all investors ask themselves, to what extent is this a repeat of spring 2020, or perhaps is this just a blip on the markets and we're going to surge higher, especially on the US indices, which saw unprecedented rally over the past 15 months or so. So we will try to get deeper into it during this webinar, so stay with us. So let's start with the obvious. We saw big declines, especially on oil and also especially European indices on Friday, as investors learned about the new COVID variant discovered in Africa that was named Omicron over the weekend by WHO. And the first reaction, I guess, it's pretty intuitive. You realize that Europe, that was on the brink of lockdowns anyway, now could just got a tip into them because of the new risk that's obviously caused by the unknown. So the reaction obviously was to sell the assets that are most prone to any kind of activity restrictions, which is leisure, which is travel, and obviously because of this oil. We saw very significant declines, as you can see on this chart. Well, maybe we had similar corrections before, span through 2 weeks or something, but one day decline, you need to go all the way back to spring 2020 to have something similar like this. So obviously Friday looked very scary. Friday looked as if it could be a return to this situation from spring 2020. However, will this really have such an impact? Well, I don't think so, first of all, and second, the magnitude and the direction, because even the direction on some markets is not that obvious, will depend on two things. First of all, to what extent are the vaccines effective against this new virus? I mean, this is the nearest thing that we'll need to discover. Of course, there will be a debate on this. To what extent is the information valid? To what extent is it trustworthy? However, for the markets, the first reaction will be on the numbers that we get for Pfizer, for Moderna, on what percentage. To what percentage are they effective and or not, or is something new required? Because if there is something new required, obviously there will be a temptation to impose lockdowns before we get the new vaccines. Secondly, Omicron will have a big effect on the FOMC policies, something that we will discuss shortly. Excuse me for this. So first of all, and the news from Friday morning, well, it looks scary, obviously, because whenever there is something new and there is the unknown, there is fear. Market participants, they saw what happened in March 2020, and as with all the pandemics, we were told for a long period of time it might not be over soon, because there will be mutations, there will be new variants. So obviously, if you get news that the new variant is there and it has some unfavorable, from my perspective, characteristic, like here you can read significant mutations which may change the behavior with regard to vaccines. So this is the most scary part, because obviously, especially in developed economies, you have people that are vaccinated to a significant percentage, and this vaccination actually was something that allowed for openness, relative openness of the economy. So if we now had a new type of the virus that would be immune to this vaccination, or where these vaccinations that were given would be very unlikely to be effective, then of course there will be a huge question mark on what's next. Even if there is a new vaccine, because we got quite quickly information from Pfizer that they will need a relatively short period of time to work out a new vaccine. Well, I can imagine that less and less people will be happy to get it, because obviously they reasoning will be, well, we got 2 or sometimes 3 shots of something, and now it's completely useless, and now they are telling us to get more. So obviously, people will be more, even if there is a new vaccine, people will be less and less happy to get it. So obviously, if there is a news that the efficiency, the effectiveness of these vaccines that we are now in place, that it's low, then obviously it's going to be a hit, especially for these traditional markets like European indices, oil, energy, commodities. These are the markets that are most likely to be affected. Well, on the other hand, if you look beyond March 2020 and look on the second wave from autumn 2020 and the Delta variant, you can notice that the first one was a kind of, limited buying opportunity. Back then on the DAX, we were still, in a relatively moderate levels. It wasn't us. If we can take a look at the charts right now, we were not as steep as we are now. So it's over here. So this was the only, I would say, reasonable correction that we had in all of this bull market. So of course there was some kind of a scare that it could be a repeat of the springtime situation, because there were a lot of infections, there were a lot of hospitalization and deaths, but the sell-off did not last long, right? It was as sharp the sell-off was, as sharp the rebound was very quickly. But then again, also bear in mind that we got over here we got the news of the vaccines. This was the first news of the vaccines, and the market stormed higher from there. But still at least there's a temporary sell-off. However, if you look at the S&P 500, this reaction was even smaller, and as you can see, with the Delta variant that we got in May, it was just a blip. Even other situations brought us much more significant, if you can say so. I mean, compared to this huge rally, there is no significant downturn anywhere here, but there were larger corrections than this Delta variant one. And when the Delta variant news came out, my first thought was, okay, it's actually going to be positive for US equities, because the Fed will get another excuse to not to normalize the policy. And this is the second point which I want to focus on today, because obviously, like I said, with more traditional markets, services, transport, leisure, well, yeah, the news on the vaccines and the lockdowns in the near term will be decisive. However, for big indices where they are dominated by tech, it's going to be monetary policy, not the virus, that will be crucial. And virus will have an impact on the policy, at least to some of the extent. If you recall from some of my previous webinars, I stressed that despite the high inflation over this year, despite the very high valuations, we had bull market continuing because of the Fed policy, where there was so much over liquidity that investors had no choice but to allocate them to risky assets. However, starting from October, we start a period where there will be significant bond placements by the US government because of the high deficit, and at the same time we started a period where Fed was about to decrease their monthly purchases, the monthly, I would say, slightly speaking, money printing. So the deficit, reducing market over liquidity, would over time would change market conditions. And before the news broke out on Friday, we had actually some speeches from the FOMC that because of overheated economy, because such a great data that are flowing from the US, they should consider withdrawing this QE even quicker. So it's called faster tapering, reducing this money printing relatively stronger from month to month, and probably ending it around April instead of around July. That would also mean that the first hike in the US could be around the middle of the next year. As you can see here, markets already started pricing the hikes in the US quite aggressively, which had an impact on gold, dollar, and started to a little bit bite the US tech. But of course on Friday these bets softened, and these bets were slightly withdrawn because, well, there's uncertainty if they really are going to go for it despite the Omicron variant. So with indices, I would definitely want to hear from President Powell, and we'll have this opportunity today in the evening, because we have I'm going to go to calendar in a minute, but we're going to have two of his speeches, one today, one tomorrow, both of them related to his nomination for a second tenure as the president of FOMC. But this will be a great opportunity for him to address the situation, to signal if they are going to use Omicron as an excuse not to do anything different that they were doing, which is just a slow taper and pushing back interest rate hikes clearly into the second half of 2022. So if that's the case, actually, I would say this thing could be at the end of the day positive for US stock and US 100 and the Nasdaq market, because as you can see here, here the decline on Friday was just a moderate thing compared to the previous bounce. So just as well, we could have much larger declines on the news of quicker tapering and sooner interest rates. So interest rate hikes. So this will be something that you definitely want to watch when it comes to stock markets. With oil, it's a bit more complex, because as you can see here on this chart, the mobility in Austria, where lockdowns were imposed some time ago, already declined quite significantly. Of course, Austria is a small country and it will not have an impact on the global oil markets. However, should such lockdowns be imposed in many large economies, then obviously impact on oil demand would decline. And with oil, even if situation normalizes over time, even if you have OPEC acting and constraining output, then of course oil prices could actually recover after some time. However, in the short term, if there are lockdowns, if the news on vaccines is bad, we could see short-term price declines beyond the thing that we saw on Friday. So remember that with oil, it's more now and here rather than the future. With the future, it's more about the equities. So with oil, you need to be wary. If the news on vaccine is bad, then of course the oil market can suffer more declines. So it's more speculative in the short term. This week, well, of course, it will be dominated by this news on the vaccines. This will be the most important news that you need to watch for, if you want to trade these markets. So please stay in our news section. We try to provide the news as soon as it's available. The second news that is nearly just as important, and in the longer run it may be even more important, especially for equities, is what Powell says about the monetary policy. If they are going to slow down because of the new variant, which could be a great excuse for them. So the two speeches, I would say, also very important for traders. One today in the evening. The other important report is NFP report on Friday. If not the new variant, that would be the biggest event of the week, because it could add fuel to this fire of speculation on higher interest rates in the US. The US data from the labor market also are coming very strong, taking away the recent excuse for the Fed not to move faster. So of course, right now they could get this excuse from the new variant. However, if this new variant pans out not to be as scary as it could be, then we'll return very quickly to this fundamental situation. So the NFP report is on Friday, and finally inflation data from Europe today and tomorrow. Of course, it's very secondary story right now to what happens on the market, but still something to watch, because if inflation persists, then well, it will be a problem for ECB, at least not to return to the previous programs and end this special pandemic program, which is about to end in March of next year. So finally, let's have a look at two more markets, euro dollar, which actually rebounded on Friday. This is because market participants thought it could be an excuse for the Fed not to act. Yeah, so the same story that affects indices, the same story affects market here, and it will, right now the euro dollar is pulling back a little bit because the markets are recovering. However, should Powell today signal that they can use the Omicron as an excuse not to accelerate taper, for instance, then the euro dollar could use it as another opportunity to bounce. However, bear in mind that the trend is very powerful, and we could very easily have already issues here at this lower limit of the downward channel, and it will be acting as a resistance. The other market that is interesting is gold, because here the new variant could also be seen as a positive because of this change in narrative from the Fed. Right now, the reaction is somewhat mixed, but if the Fed becomes less likely to act, then of course bulls will be happy on the gold market and will see this as a potential opportunity. So, ladies and gentlemen, this is it from my side. Markets are going to be definitely very interesting next few days, so stay with us, track the news section in Next Station Mobile, and we see each other next Monday on 7:30. Have a great week.